The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Hello, happy Monday. Welcome to the COB, all the stuff you need to know about the day in business and markets. I'm Juliette Sarli.
And I'm Danielle Akuye.
Well, Danny, quite a turnaround on the markets. I mean, we're going to end pretty flat here despite some heavy selling in the open.
Absolutely. So it was really encouraging to see over the course of the day. Sold off early in the morning, and that was for the weak lead that we saw on Wall Street, but the buying came in, and it does look like the ASX 200 is closing down about 5 points at this stage, so pretty flat. SIBO 200 up 1.19 points, again pretty flat. But it looks to me like our Australian bond market might have been playing ball today to support the equities a little bit. But hey, we'll keep that on a thought on ice for the moment.
Yeah, but bonds certainly very much in focus. That is indeed what we're looking at throughout the course of the weekend, of course, when that plays through into that inflation picture as well. And we've got the core monthly figure coming through. That's going to be key for the RBA, although they're probably more going to be focused on that quarterly number that comes through in October.
Totally, yeah. So I think on Wednesday we have our August CPI. I think we're looking for around 5.2% as opposed to around 4.9% in the July reading. A lot of this, it tends to be quite volatile. So they really, as you say, are going to be looking, I think it's that October 25th quarterly number for the September quarter to get a better reading on whether or not we are going to ruin Melbourne Cup Day.
Exactly.
With a rate rise at 2:30 just before the big race.
I think we've got our three themes as well that there we go. So we're talking about bonds, the inflation read, and the other key one is dividends. I mean, it's the biggest week this week, $21.7 billion of dividends hitting investor pockets. You've got CBA about $4 billion, BHP about 6.3. And I was speaking to Craig James from CommSec a couple of weeks ago about this because he says, you know, this could be a big boon to the economy if people take that money and spend it, or are they going to reinvest it back into the share market, which is a good news for the market.
Or pop it, the other one that they have now is popping it in the bank, or effectively, you know, because the banks actually aren't providing the best cash yields at the moment, but you know what I'm saying, you have an alternative now, and you're absolutely right. It will be interesting to see where that liquidity goes in terms of whether it does come into the market. But let's check in, shall we, and have a look at some of the sectors, because I thought there were some quite interesting moves. So let's have a look at miners.
They were certainly the underperformers, weren't they? So you were talking before about the iron ore price. You've got Fortescue there down by almost 2%. But when you have BHP, Rio both off by 0.5 to 1%, then it's no surprise that we only kind of closed flat. But I think the heavy work that you did from some of the other sectors is why we did not close lower today.
Absolutely. And it was, I think, the fact that we have seen some weakness in those iron ore prices. But let's also have a look at the banks and see how they did. So also a little bit of profit taking, and absolutely right, Juliette, like a lot when you say the miners and the banks, that's, you know, almost, you know, financials and resources, almost 50% of our index. So a little bit weaker today. They would have been drains. However, we do have some positives.
Yeah, the tech players.
Yeah, tech was really out of favour last week. Those higher bond yields caused a lot of selling pressure. Interesting to note, Technology One leading the charge, up around 4% today. Xero also up around 2%, as is WiseTech Global. And utilities, I think we had some a bit of green on screen with AGL in particular, and I don't think there's any particular news.
I think Macquarie had an outperform for AGL. We had that in our broker moves as well. So they were saying some pretty good, they've upgraded AGL to outperform. So it was one of the front runners, up by about 3.2%. But I think the other really key story, of course, was about Qantas. So they were mentioning that they're going to have this hit of about $200 million when it comes to these higher fuel prices. They also expect another $50 million impact due to non-fuel related FX changes. And they're investing about $80 million to address customer pain points like their call centre, more frequent flyer seats. But really it was that impact on oil as to why you saw Qantas shares down today. You can see over the year they're up by about 1%.
Yeah, 52-week low, I believe, and that pretty much looks like it, doesn't it, on this chart? Or definitely heading there. Yeah, they've certainly not in the sweet spot at this point in time. And we also had stock of the day today, which was a lifestyle communities. And this is a stock that has been a really big one for what am I trying to say? Goldman Sachs, that's what I'm trying to say. And they have done another deep dive into this stock and have upgraded it again. And they're really confident about the company being able to pay down debt through these improved cash flows. So that was stock of the day off the back of that Goldman Sachs upgrade. And I think we had Mathan and Gaurav commenting on the call today. So we might check in with that.
Looks expensive, the yield looks too big on historical terms. Is that be sustained? Probably not. I think things will slow down, but it's a solid business and I think it holds up relatively well. I think it depends on what you're buying it for. If you're buying it for the yield thematic, as long as you understand that the future yields will be lower, I think it's okay. I think it holds up relatively well, and I think the thematic holds up relatively well for them. So I'm okay with that for the yield thematic, but I'm just a bit wary on the sector, so we're staying out of it. There are a few good players in that sector, and this is one of them. So I'm comfortable if you're there for the yield play, but for me, I'm looking at total return in this market, and there's a fair amount of risk in the market. The upside is not really there for me for the potential market risk. So I'm not there for that reason, but if you're there for the yield thematic, I think it's okay.
Because we haven't had a property slowdown, which I think has shocked a lot of people. I'm going to keep this as a hold. I think it looks a little bit expensive, but I've said that for a while, and I think sometimes for these high quality businesses, and I do think the trick about this one is to recognize it is a high quality business. You can pay up for these. I'm going to go a hold, but I think with more work, one should be comfortable buying it at this price.
Was the stock of the day. Let's get to our guest now. Welcome to the COB, Josh Gilbert from eToro. Josh, we're just talking about what an interesting day's trade it has been when you've closed virtually flat here. And if it wasn't for that weakness in the miners and some of the banks, we could have had an even better session. What do you think sparked the turnaround in the late trade?
Yeah, a couple of rebounds from the ASX Friday as well. So a pretty sharp rebound as well, and obviously we had the same today. Look, I think there's a little bit of buying there, some contrarian opportunities sort of popping up, and I think that some of this weakness that we've seen across markets, probably since going back to August time, has sort of opened up opportunities for investors. I think they're looking ahead to what is set up to be a better Q4, a better 2024, and I think they're seeing opportunity in especially some of those tech names that are being sold off, and that's why we saw those tech names do well today as well. Obviously, as you say, we had that little bit of weakness coming through from the materials sector, iron off about 3% today, the futures. And obviously still got that weakness coming through from China with this risk of a fallout continuing to happen from the property sector there. I think property developers there came under further pressure as well. But yeah, I just think we're seeing a little bit of contrarian buying from investors that are forward looking here.
Josh, we've got potentially another shutdown in the US. Senator McCarthy's trying really hard to keep the Republicans, some of those hardliners, bring them into line. Is this going to, do you think, cause a problem, a shudder in markets towards the end of the week and maybe into the beginning of next week?
Yeah, so I think it's a worry for markets. Add in there, you've got the sort of UAW strikes. We've obviously got, as we said then, what's going on with China, and then obviously throw in the Fed and this conversation around higher for longer rates, the sort of dominating markets. I think there are a few hurdles to sort of get over in the next sort of couple of weeks, and I think that will keep markets on the back foot. But I think I don't think this is something that we worry about longer term. I think this is one of those things that we talk about in the short term. It's a reason for investors to go a little bit risk off in the short term, especially when you've got sort of oil prices, above $90 a barrel, and sort of stoking those fears of headline inflation growing again. Obviously, we're going to get that this week from our CPI reading. But as I say, I think it is a short term risk, but I don't think that it's something investors are really thinking about that's going to affect long-term positions here.
Well, let's get to that inflation read, because it is an important one for the month. But really, as we've been saying, the key focus and what's going to move the needle for the RBA is going to be that quarterly print coming through next month. So I guess it's still significant, but what are you expecting, and how do you think investors will react?
Yeah, so you're absolutely right. I think that quarterly inflation is always the sort of the key number. This monthly sort of reading that we've had only just sort of recently gives us a better understanding. I think it helps maybe give markets a little bit direction on what we think the RBA are going to obviously do next. I think the good news here is that we've continued to see inflation move in the right direction. We've had monthly declines every single month since peaking in sort of December, 4.9% last month. I think Danny said it at the top of the show there, but we are expecting between about a 5.1 to a 5.3% reading. I think a lot of that, again, as I mentioned earlier, is going to come from oil prices, that pick up in petrol prices as well. The RBA has stayed on pause. They've kept rates on hold for the last 3 meetings, and I think that the reason that changes would be to a surprise uptick in inflation. If we see inflation staying high, staying stickier, then I think that's why they've kept the door open here, because they don't want to say that this is over and then have to come back and make themselves look silly and hike again. And I think we're seeing that play out across all central banks. Nobody is sort of waving the checkered flag here to sort of say they've beaten inflation. I think that's probably a smart move, but I do think we have seen, what is the end from the RBA. I'm not sure, the sort of the pickup in oil is something that will be sustained. We think that it will self-correct and ultimately won't feed inflation long term, and inflation will continue to sort of trend downwards. So I think that, they have, as I say, that the minutes that we had from the RBA last week did sort of support them keeping the door open. Markets also think that they're done as well. There's only a 50% chance markets think they hike again before year end. So, I think whatever we get from that inflation reading isn't going to change the dial too much. And as I say, it's, we're talking headline inflation here. That core inflation is continuing to sort of move in the right direction, particularly in the US as well. And locally, as I say, I think we're moving in the right direction.
Josh, it kind of hit the nail on the head. The central banks sort of playing, a game of chicken, aren't they, with the markets? They don't want to give them the heads up that, hey, we've finished hiking, because if they do, we'll be off to the races again, and that completely negates all the good work that they've done. Within that context, what sort of sectors are you guys, or stocks are you liking at the moment, if you were to go bottom fishing into the sell-off that we've had, or if we see any further weakness?
Yeah, look, I think we are fundamentally positive on markets. I think what we've seen over the last couple of months is this sort of breather that we felt was expected, but we also felt in that time that any weakness that came about, especially in sectors such as, technology, we felt were going to be opportunities for investors, especially moving into what we think is going to be a strong 2024. You're set up to have lower inflation, you're set up to have sort of rate cuts on the horizon. Economies have been much more resilient than many had expected. And as I say, that all of that sort of pieced together for us sets up a better year. We do, as I say, feel that there are, opportunities. There are some contrarian opportunities coming through, whether that is in China. Again, we think that the Chinese economy is likely bottom now. So the sort of worst, of what's happened there is likely behind us. And that can then maybe feed into some of those sectors that will benefit from, interest rate cuts, such as the material sectors, moving forward. So I think there are opportunities for investors in this market. And we've seen it, I think, over the last sort of few days with, the buying that we've seen across technology when we have seen these sort of large sell-offs. And I think it's a sign that, investor confidence is still there. Ultimately, we had the worst week on the ASX all year last week, but I think we are sort of seeing that buying. We are seeing investors, put capital back into markets because the peak of rates, I think, is here. We've seen the peak of rates, and I think a lot of investors know that. We are now just sort of toying with the idea of, okay, how long are these rates going to stay high for? That's sort of the next hurdle we've now got to get over. But I think investors, as I say the whole time here, are forward looking, and they're looking towards, lower inflation, rate cuts on the horizon, which sets up a much better year in 2024.
All right, Josh Gilbert from eToro, thanks for joining us on the COB.
Thanks, guys.
Of course, as we mentioned, pretty flat close despite a negative start to the day's trade. Let's see what some of the heavyweight movers were when it comes to the leaders today. Paladin Energy, an interesting one, up 7%. We're talking about the overall tech space as well. And I did note earlier that Technology One was a standout in that space. So it has risen by some 4.3%.
Yeah, I think Technology One is one of the companies that reports out of cycle. So they are probably going to report in the coming weeks. Interesting, I was chatting with David Lennox about the whole uranium trade, and it is quite an interesting one because at the moment it's a shortage of supply from the secondary market, and this is very much, for example, old nuclear weapons when decommissioned, that uranium that is now not appearing onto the market. So Paladin has been really, really strong, and as you said, up 7%. I thought it was quite interesting that Whitehaven was up 4% because of course they flagged that they're very interested at buying BHP's coal assets, which if my memory serves me correctly, last week they were under some selling pressure. New Haven had some great results and up their dividend, whereas Whitehaven was being sold down, whereas today up 4%. And Megaport, one of the favourites in the data centre, or I should say in the AI space. Again, a stock that has been probably heavily sold down as these interest rate yields or the treasury yields move up, and some good buying there, as well as the AGL, as you mentioned that there's been
Macquarie outperform. Yeah, let's have a quick look at the laggards as well in terms of what stocks we saw moving lower today. Chalice Mining down 4.5%. Sayona Mining, I mean, I think that was one of the laggards on Friday as well. So it's had a loss of almost 4%. And it does look like a lot of these players are in the materials sector. Atlas Arteria, I did see...
Ex-dividend.
Yes. I saw there was a note out on that. So that's why it's down by about 3.2%.
I think the costs on Allcom, they have upgraded their cost guidance, and that is why that stock, I think, was down today by about 3%. So just checking here, I'm pretty sure Atlas Arteria was X, but however, I'm only getting Auckland Airports up at the moment. I'll have to check another source.
There was definitely a note on Iris earlier about Atlas Arteria because that was one of the ones, you know how the day just gets away from you, I should say. That was on my radar earlier this morning, and it certainly has continued to fall. Last week as well, oh, you're right, it was ex-div today, and last week as well, it confirmed that distribution of 20 cents per share. So falling by just slightly less than that. So actually, if you're going to play that game, it actually did better than what you were expecting.
Absolutely.
All right, quick check as well of the small cap leaders and laggards as well. Kinetico Energy up 15%, Bannerman Energy up by 10%, and then if we have a look at what the laggards were in the small cap space as well, BrainShip there down 7.7%, and Jindalee Resources, an underperformer, down 11% today.
Indeed, and let's check in what's overnight. And actually, I don't think we had that much overnight coming up. What have we got? Germany Business Climate Survey.
Yeah, that's kind of an interesting one though. It's called their EFO or something. It's got some strange name. I'm forgetting what it's actually called now, but I think the EFO survey, and that's always quite an interesting read of what is happening in the Eurozone and Germany in particular, particularly as we know when Germany is looking kind of like the weak link at the moment.
Absolutely. And in the US, the Dallas Fed Index, was it?
Yes, the Dallas Fed Index. So just a quick read from one of the Fed, the smaller Feds. And of course, tomorrow we have got a little bit happening, a few more ex-div stocks tomorrow, I think. And then, of course, in the US session, in terms of data, we'll have August new home sales, July house prices, and the Conference Board consumer confidence, but no local data. So we're really just awaiting again, Danny, this whole point of the inflation read we're going to get in later in the week. So I think midweek, towards the end of the week, when we start to have a lot of ex-divs as well,
absolutely,
is when it's going to be a bit more, I guess, local.
I just noticed we've got Suncorp's AGM tomorrow, and Nick Scali is going a ex-dividend of 35 cents dividend, 100% franked if you're a shareholder there. And yes, that CPI for August here in Australia will be very interesting. And then, of course, moving to the US, they have their GDP read on Thursday. So it looks like the back end of the week is potentially when all the action's going to start to happen, as well as all those naughty senators over in the US.
All right, that does it for the COB and for ausbiz today. We'll be back again early tomorrow morning. See you then.
Have a great evening.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.